we just continue to grow, just nice, steady pace. And, as you know, Stephen, my claim to fame in this industry is revenue. I've never been focused on, I want to be the king and have 1,000 doors. What I've always wanted to do is maximize the revenue per door.
Today I'm speaking with Tal Kramer, president of Avalon Property Management based out of Marietta, Georgia. Tal has been in property management since 1991 and has over 30 years of experience. On top of that, not only does he manage hundreds of doors, but he has an extremely high revenue per door at around $6,700 per door. He also has a very healthy profit margin at around a 30% profit margin. And thankfully, Tal agreed to speak with me today and has a lot of knowledge to share with you. So without further ado, we'll get straight to it. Tal, thank you so much for joining me today. To kick things off, can you tell everybody a little bit about your background and experience in property management?
For sure. Glad to be here, by the way. I have a very diverse background. Been doing real estate since 1991, and property management has been the primary focus since just about the time of the recession. We can go into that later. But my background prior to real estate I had many lives. One of them was in IT for many years, writing code, developing, managing systems people. And interestingly enough, opened up our own consulting company too for data processing consulting. But one of our customers was Chicago Title and Trust. So I learned about the title side for the real estate industry. And another client went out and served large credit granting institutions in the days when there were 5 credit bureaus. These were Fortune 100 companies that were throwing thousands of applications in a day, going out to the credit bureaus, pulling the credit score data, and then applying it to their customized scoring algorithms, which were not standardized like a FICO score. So I learned all about the credit side, which again, wasn't a game plan, but it helped a lot when I was in real estate. So it's just an interesting background.
It seems to be a theme in property management where people didn't necessarily they didn't study to become a property manager. It's something you just kind of fall into, whether it's intentionally or by accident. I guess
the funny thing is, you talk about by accident. So I was working for the software firm that developed and sold the software for the credit industry. And eventually I was running the systems people and going out and doing support. And I just knew the company could do better in terms of more doors being closed, so to speak, more contracts being signed up. So I said to the owner one day, look, my team runs itself. Let me go out and sell. Well, I sold more in that year than 3 salesmen had combined in any prior year. And I became the VP of sales and marketing. And then one day the owner decided to bring in a new CEO to run the company, and he and I were like this. We did not get along. So I got out of there and decided I would do real estate part-time while I looked for a real job. That was 1991.
Yeah, you're still looking for that real job, I guess.
No, I do some consulting now, but that's about it.
Hey, quick break from the interview, just for a second. If you're listening to this podcast, there's a good chance you're looking to grow your property management business. Our team at Upkeep Media is offering a free property management lead generation session to all podcast listeners. Just visit our website at upkeepmedia.com/growth. Fill out the form on that page, enter the coupon code podcast, and you'll sign up for a free property management lead gen session. A team member will reach out to you at the time that you book. During that call, we'll show you what your top local competitors are doing to bring on new properties to manage. We'll take a look at where you're currently positioned online and then give you actionable strategies that you can use to grow your property management business. Just visit upkeepmedia.com/growth, fill out the form on that page, and we'll speak with you soon. All right, let's get back to the interview. So you basically left this company, you started in real estate while looking for a job, and how did things go from there? How did you end up getting to, let's say, your first 100 doors under management?
Well, it's funny. My wife and I have worked together since the day we met in '81, and she was in IT as well. And, we would sell properties to some investors, and they would say, and we've owned our own rental properties since the late 1980s. They would say, will you own rental property? Will you manage this for me? And I was short-sighted back then. I said, no, you can do this yourself. I was thinking, oh, I'll make a couple $100 in management fees and give up the time that I'm investing in real estate sales. I was selling over a home a week one year. So, I was making some serious dollars. At any rate, it wasn't until just around the recession that it just seemed to go bam, bam, bam. We had 3, 4, 5 owners in a row that said, I need to sell, I'm relocating, whatever it is. And the numbers were so ugly that they were going to have to bring money to the closing table, or they would lose so much equity that Jeanette and I looked at each other and said, we never really wanted to do this, but why don't we manage it for them for 3 to 5 years and we'll sell it later. We can handle this. Next thing we know, we had 10. Next thing we know, we had 15. We had 20 properties we were managing. It just kept snowballing. And look, I don't mean to do this, but I think I'm a pretty smart individual. I have a good business sense. Thought I knew enough that I could do a good job for them. But there was a local trade show put on by the Multiple Listing Service and the Atlanta Board of Realtors where there was a booth for NARPM. And Jeanette saw the sign, property management, walked over, met those guys, signed up with NARPM, realized the buckets of things that I didn't know, and it's been a ride ever since, and we just continue to grow, just nice steady pace, and as you know, Stephen, my claim to fame in this industry is revenue. I've never been focused on I want to be the king and have 1,000 doors. What I've always wanted to do is maximize the revenue per door. And I've spoken on this once at Broker Owner. I just had a session in Orlando at the national conference, and we generate over $6,700 per door annually and still maintain a 30% profit margin. So it's our son is in the business now. You've met him. He co-owns the company with us. He'll take over one day. But it was like once he went to his first NARPM conference and started talking to other people is when his eyes opened and he realized, wow, we really have a foundation here that we can build on. Now's the time to be adding doors as opposed to, a lot of people that just, listen, I've got friends in the industry that their model is, $75, $80 flat fee per month, and they get lots of doors that way. But are they making money? Are they profitable? I would rather have a better system, and it's not that we're expensive. We're actually not. We can't talk numbers here, but I've done the secret shopping, and our cost to the owners is comparable to most of my competition. It's that we've identified so many other revenue buckets and we've implemented them. We've learned from people and jumped on things quickly, and that's enabled us to, really be much more successful and stay small.
Are you able to touch on what some of those extra revenue buckets are?
Well, like one thing I've talked with some people before, and by the way, I want to be clear on this. I know there's people that teach courses in fee maxing. I am adamant you don't put a fee out there unless there's a benefit to the parties involved. One of my pet peeves, and I can espouse the logic on the opposite side, but one of my pet peeves is people that charge an annual tax preparation fee. Well, come on, the law requires we have to issue a 1099. Our software kicks out a 12-month cash flow statement. I don't need to, just because I can charge an extra fee, I don't need to ask for that fee. It doesn't benefit them, it just benefits me. So anyway, but years ago we have a handful of rental properties we own, and I didn't like the policies available to me for landlord insurance from the typical captive carriers with your Allstate, State Farm, Farmers, etc. In many cases, and this is not so much the case anymore, they would not, on a landlord policy, issue more than $500,000 of liability coverage. Whereas on your personal home, you can get $1 million, $2 million, $5 million. Well, if you knock on wood, we're in business over 30 years, we've never been sued, but if you follow the NARPM discussions and you talk to people who have been sued, seems like the attorneys don't know any other number but to sue for $1 million. So what good is it going to do me if I only have $500,000 of liability coverage? So I went out and shopped, and we set up a master landlord policy. Now, think of this like if you work for an employer that has health insurance. The employer goes out, identifies a policy, gives you the option to enroll in their policy or get your own insurance. We do the same thing. Well, our master policy that we offer out has $1 million of liability insurance, has mold fungus coverage, sewage water backup coverage, a whole bunch of things that are optional when you go to your traditional captive carriers. Well, we make money on that. We're not insurance brokers. We charge an administrative fee. Well, that puts a nice number to the bottom line every month. We have lots of revenue from pet fees. We have lots of revenue for what we call a credit contingency fee. So many companies...
What is a credit contingency fee?
So many companies, they have their criteria of whatever the credit score is. If you're above this, great, we're going to rent you. If you're below this, sorry, next. We accept the lower ones and charge them an additional monthly fee, a risk mitigation fee. We call it a credit contingency fee, which can get removed if their credit score gets up. And we qualify them that their income, which is typical in our industry, they have to prove 3x income to whatever the rent and so forth. Well, it's got to be 3x for the rent plus the credit contingency fee. Well, that puts money to the bottom line. And guess what? Statistically, we've only had 1% eviction in like 15 years. Okay. So, and statistically, there's no more risk to those people than there is to the people that we have that don't need a credit contingency fee. And these people are happy about it. They thank us for renting to them because so many other people said no. So it's, again, am I a rocket scientist? No. I learned about it from somebody in NARPM.
Yeah. What would you say contributes to the 30% profit margin? Because that's higher than industry average. What is it that you're doing or potentially not doing that other property managers are doing that allows you to have a much higher profit margin?
Look, that should be the target. There's no question about it. But I think we're just very efficient, and the nice thing about having that higher revenue per door is it's surprising, we have one staff member for every 25 doors that we manage, which is way more staff than most companies are, but we can give better service because of that. And, I think that we're just very efficient on tools. I've always been willing to invest in tools that help us and automate. We were on Lead Simple, back to we signed up on the broker owner in Connecticut. That's how many years ago. And yeah, and then we're almost 100% transitioned over to Apply and using their tools. We're, we do some AI stuff to help us be better internally in terms of services and efficiency.
Can you touch on that a little bit? Like what AI?
Well, sure. Like I mentioned this whole thing about the master landlord policy. So our new policies just came in. Well, I threw it into Notebook LM with last year's policies, and I said, run an analysis and tell me what the differences are. Because the insurance agent always says, yeah, nothing's changed. Well, I want to find out for myself instead of having to read this tome of an insurance policy.
Yeah, which is impossible to understand anyways.
Right. So, that was just a simple tool to help make me more efficient. You probably know him in our space, Justin Anderson. He's spoken at many of the conferences. He's a PM like I am and also owns a software business serving the industry. Well, he recently distributed a book called Funny Money. I'm telling you, anybody that's listening to this, if you're in real estate, go on to Amazon, 1995, get a copy. I read it in one day, and I'm not an avid reader. It's anecdotal, it's story-like, but it's about investing and understanding market timing and the lessons learned from him over, his career. And the guy's sharp. I think he's a Harvard MBA as well. But my point is, Aaron just took a copy of his talk from broker owner, put it into an AI tool, pulled out highlights, and now we're thinking about, oh, well, maybe we should do something with some sort of communication to our owners to give them some of the key bullets and so forth. But when I tell you this is a worthwhile read, we went out and we bought hundreds of copies and sent them to all of our owners for the holidays, and gave copies to all of the real estate agents that have referred business to us.
Okay, so it's called Funny Money by Justin Anderson.
Yeah, $19.95 on Amazon. Okay. Justin, if you listen to this, you owe me.
So let's go back to when you were newer in the business. So you basically had grown pretty much through word of mouth for the start.
For sure.
Eventually, like, what other strategies did you add on that helped you grow to where you guys are at today?
Well, kudos to Upkeep, and I don't say this just because you've invited me to the podcast. As you well know, we met Alex, I think it was a Phoenix NARPM conference, and signed up with you guys back in 2019. I will tell you that when we signed up, because I was in the software industry, I had a pretty good web page. I was very proud of it. When we signed up, though, nobody knew where to find us, and we probably couldn't find us on the 50th page. I think within a year or two at tops, we were always showing up on page 1 or 2. Now, organically, we're always on page 1. And, I think we just did the analysis. I think 70% of our new leads are just organic. No pay-per-click, no nothing else. So you guys did that. That's a big source. We're in a unique situation that we're agents also with a company, a brokerage. It used to be a Remax brokerage. Now it's Atlantic Communities, 7 offices, 2,200 agents. Because of my longevity, because, I was in our county when I was peaking at that home a week sale. I was in the top 5 agents in the county. So I have a reputation. So there's a lot of people that, as they're learning more that we do property management, we're increasing the number of agent referrals. So things of that nature. We try to do smart things. Again, I'll go back, Justin, you really are going to owe me, to Justin's book. Aaron said, you know what? We should set up something in our Aptly process that every new owner that signs up with us, we're going to send them a copy of the book.
Yep.
I don't care if they read it, they don't, but they realize that we're more professional, and we're going to get that in the system within the next 30, 45 days.
Okay. Can you talk a little bit about that? Like, what is your typical owner onboarding experience? Because I think that is super important, because it's their first experience working with your company. It allows them to get a sense of your professionalism. Like, what do you guys do? Let's say an owner signs on, they sign the PMA. What does it look like from there?
Well, we've got a BDM, and once the owner signs the PMA and puts in the initial startup fee deposit, then there's a handoff, and ideally, and most of the time, it's a video meeting. We're a Google Workspace, so we use Google Meet instead of Zoom, but same concept. But it'll be a Zoom meeting with the BDM and the property manager, and they get introduced to each other, and then property manager takes over from that point. The BDM obviously isn't disappearing if there's questions or whatever, but we want the BDM focused on new business, so we do that handoff, and the property manager, our maintenance coordinator, reports to him. Our leasing manager reports to the property manager as well. So he's the central hub that everybody can talk to.
Okay, got it. And how many touch points are you usually having with an owner in their first year?
I don't know the answer to that. Obviously, we're going to communicate as much as we can. We do. One of our touch points, we use Appfolio for our software, and every month they get their owner statement, and there's a cover letter that goes with the owner statement, and it's sort of like a little newsletter, that it'll have information for them, like this, for example, the one that just went out now, will remind them that we've already uploaded their 1099 and 12-month cash flow statement into their portals and to review it and get back to us with questions, things of that nature. So we'll be communicating. If there's somebody new on the staff, we'll announce them. If there's a new tool or a new service, one of the things we did for years, if they didn't go with our master landlord policy, for years we required two things: that they have a minimum of $500,000 of liability coverage, and they provide proof of that and proof that they've added our company as additional insured. Well, I finally got to the point that, just again, we haven't been sued, but knowing that a lot of the suits are for $1 million, we went ahead late last year and announced in that cover, and we do things 2 or 3 times to make sure they don't miss it, but we announced in that cover that effective January 1st this year, all liability policies have to be $1 million.
Okay.
So, it's a communication vehicle.
Yeah, got it. So you mentioned earlier you have roughly 1 employee every 25 doors, which is way more employees than most property management companies have. I've heard of as low as 1 every 200 doors. What does your team look like right now, and what are let's say the major roles?
Okay. So again, my wife and I started it, and we hired a consulting firm. I've been relabeled visionary. That's my title, I guess. I'm the president, but Jeanette runs everything financially, not only in the business and our personal life. People say to me, well, how much does that cost? I say, I don't know, ask Jeanette. I don't pay for anything. When I want to do something, you and I talked before this that we've gotten into cruising lately. And when I want to go on a cruise, it's like, honey, can we do this cruise? Can we afford it? She's the numbers. So, and then Aaron, my God, he has taken over all of the operations. He's officially director of operations, but all the staff reports to him. The property manager, the maintenance coordinator, the leasing manager, everybody reports to him, in a hierarchy through the project manager, or the property manager, excuse me. And he's the one that, he's got a good technology sense. He's got a terrific admin experience. He kicking and fighting, eventually agreed to join us in the business, and came from an academia background. He went to George Washington University in D.C. and parlayed that into a career there, and was working directly for the vice provost in faculty affairs and administrative, with herding cats with the teachers and professors. And he just brings an organizational structure to us that there are things that I didn't think about. I mean, we talked about AI, and I don't know, it's not really AI, but we have a whole Notion library. We use Notion, and that's where we're building the documents that everybody can have as a resource. And he's got the KPIs in Notion, and he's put the structure in that we have a weekly management meeting, and we have a weekly team meeting, and then 3 of the days a week we have a 15-minute daily huddle with everybody. Half our staff's overseas, but with everybody on there, and what are the issues of the day? What do we need to focus on? He's tracking maintenance turnaround. It's a good organizational structure, and it keeps improving.
Okay, got it. And then you mentioned you're the visionary right now. So what does a typical day look like for you at the moment?
I should be doing retirement. Instead, I can get in my desk and not leave for, other than a bathroom break or grab a sandwich, for 6-7 hours. In day-to-day responsibilities with the business, I still handle delinquencies, even though I said we only have that 1% eviction rate. You always have a handful of people that don't pay on time. It used to be a lead simple process. Now it's an Apply process to stay on top of all those people and file the 3-day demands and file the eviction. We just don't get to the eviction because they eventually pay up. But I'm the bad guy putting pressure. I still handle any real estate sales. We don't pursue sales, we pursue property management. But as anybody knows who's in this space, you always have a certain number of owners that want to sell, And 30 plus years in the industry, we get people that reach out to us, because, we did business with them in the past.
Yep.
So I handle the sales. I'm always looking at, I spend a lot of time, your podcast, reading listening to other podcasts, reading other newsletters to see what I can pick up and glean to implement. Because when I go back to what I said earlier about the high revenue per door, well, it's just that how many people go to a conference, have a notebook, and it sits on the shelf. They don't do anything with it. And I'm just the opposite. I'll take that nugget and come back. How do we implement this? Drive Jeanette crazy or Aaron crazy. Like, hey, we got to put that slower because we got these other things on our plate. But I'm always looking at that. We just implemented a security deposit waiver program. So I went through and made all our edits to the lease, to the PMA, reviewed all those things. What are we going to change in our marketing? So that's really the kind of stuff that it's the creative side. It's what do we need to think about?
Coming up with the new ideas, trying to push things forward, and then getting some pushback from Aaron and Jeanette, basically being like, okay.
They don't push back that much. I mean, they know it, they see it, but it's like, I don't know, I just saw something we use. We're not on the full blanket program, but we do use blanket. And I saw something from them just the other day about an annual owner statement, and I pushed it over to Aaron. I said, take a look at this. Maybe we should investigate this and see what this is about. It looks interesting. So it's stuff like that. But it's because I'm always trying to learn more. I guess that's the secret. Never think you know enough.
Yeah, being a student of the game.
Yeah, I mentioned, the brokerage we're part of with the 2,200 agents. Well, there's some smart people there, but they come to me as the consultant for the brokerage on property management and leasing for things that they can't figure out themselves or they want to bounce it off of me. And I remember originally when the president, I can't remember if his title's CEO, whatever it is, but when he said to me, Tal, we want you to do this for us. And I said to him, Mark, what I know would fill a thimble. And he said, your thimble's bigger than any other thimble I know, so we want you to do this.
Fair. So you mentioned earlier $6,700 per door annually in revenue. Are you very selective in terms of the types of properties or the types of owners that you work with?
Yes and no. I mean, we're territory bound. We have our parameters. We won't go north of this and east of that and so forth, and we'll just refer that to other PMs in our territory. We also, we do charge a monthly minimum fee so that people will self-screen themselves out. I don't want the $700, $900 rental. I just don't want to deal with that. I don't need to deal with that.
Yeah.
So we let them screen themselves. Occasionally somebody says yes, and okay, well, you realize you're going to be paying like 10, 11, 12%. And they say, it's okay, we've heard about you, we want to use you. But so that's one way that we're screening. And then on occasion, we will, after you intake a new property, you go out. We don't go look at it first. We'll sign up. Most of the time we don't. We'll sign up, and on rare occasion, we'll look at it and say, okay, well, this is what needs to be done. They don't want to pay that much, and we're not willing to take the property in. So we'll say no. A lot of people that are probably listening to this know a company called Onsite Pros, been around forever, great company. And Mark Ennis, who actually, by the way, is our BDM now, but Mark, when he was inspecting, training inspectors, etc., opening territories, he would say to us, says, I always know when I go into an Avalon property, it's just you guys take care of everything. You don't let it, you don't let the quality drop. And the guy who wants to nickel and dime and doesn't want to spend any money, I keep telling him, the tenant that's going to accept your property with the marks on the walls or the stain in the carpet is the same tenant that won't take care of your property. That's not the property we want to manage.
Yeah. And did you figure that out early on, or did that kind of come to be through years of experience?
I think it's just because that's how I am. I was raised by a mother that it's like, with no exaggeration, if you got off of the living room couch and didn't fix the wrinkles in the couch, boy, did you hear the end of that.
Did we have the same mother, or?
Could
Yeah.
be. So, I was always neat, organized, structured. That was just part of my nature. So, if I guess my standard is if I don't want to live in it, I don't want to manage it.
Yeah.
I'm not saying, look, I don't, if it's a 3-bedroom 1950s ranch, I wouldn't want to live there. That's just not my taste. But if it's neat, it presents well, it's taken care of, yeah, I'm proud to manage that property for them.
Fair. So you've obviously been in property management for a number of years. During your time in property management, can you share one crazy story or experience that you've encountered?
You want them alphabetically? I still remember, I was just telling the story the other day, I still remember going to a property, it was vacant, I step out on the deck, sliding glass door, it's summer, the deck's up, it's got a full basement underneath, and because it's summer and the air conditioning's running, I slide the door back behind me. Next thing I know, it had a faulty latch and the door's locked behind me. I'm there alone. It was before cell phones. It was when you had the bag phones. You didn't take them in your pocket and go into the place. And I'm now stuck on this second story deck. It's like, shit, what am I going to do? And I had to kick out spindles from the deck, hang over the side and drop. And I'm like, I'm going to kill myself here. So needless to say, anytime I go into a property, I always have a key in my pocket and I never fully close the door behind me anymore.
Okay, learning lessons from years of experience. So if you could go back in time to when you started your journey in property management, what is the one thing you would change to help your company succeed at a faster pace, whether success means growth or whatever it might be for you?
I'll just segue one thing from there. Because I've had both careers in sales and in property management, if I could go back in time, what I often tell people, I would have started in property management and evolved into sales instead of the other way around, because I was naive to not realize the number of sales opportunities that are a result of being in the management business. Now, I think, it's a catch-22. What I would have done is find an organization like NARPM, find a network much faster, but I say it's a catch-22 because I didn't know it existed. NARPM 2.0, hopefully one of their big goals is to get people in the industry more aware of NARPM and build up the reputation of the NARPM identity, the NARPM brand, so that, people, it's just, I can't tell you how many times I talk to a PM somewhere and they've never heard of NARPM. Or now I'm doing consulting to some companies that want to increase their revenue, and one of the very first things I'm saying, are you a member of a NARPM chapter? What's NARPM? Well, I'm a member, but I never go. Go, meet people, talk to people. Mm-hmm. So, I don't know if you know of this, and there's a sales trainer from a million years ago called Tommy Hopkins, and he talks about the 4 stages of learning. And I love this story. It fits for everything in your life. The 4 stages are: you're unconsciously incompetent. You don't know what you don't know. Then you become consciously incompetent. You know you don't know stuff. Then you become consciously competent, where you know it, but you really have to think about it to do it. And eventually you become unconsciously competent. You're the expert. You don't have to think about it. You just do it. You flow. And all those things can be accelerated, all those stages, by conferences, webinars, podcasts, networking, because it's all just going to start flowing in more frequently. Absorb it. And that's my success. I'm a sponge. I absorb stuff and I'll just, good idea. Let's do that.
Yeah, it's great advice. So I know that you do a little bit of, I'll call it community work by helping other property managers from time to time that want some advice with what they can do to increase their revenue per door, increase their profitability. I guess for anyone that's listening but that would like to speak with you, what's the best way for them to get in touch?
Call or email. My email is my first initial T, last name Kramer, Kramer, at mydreamhome.com.
Awesome. Thank you so much, Tal.
Pleasure always.